think Bitcoin still has another leg lower to 12 to 13,000. I think the stock market likely by end of year or early 2023 will tag the March 2020, well, the highs just before the March 2020 COVID collapse. The S&P downside to like 3,400 or so. The key for gold's outperformance is going to be when you hear the Fed pivot.
After the cryptocurrency market had lost $165 billion from its market capitalization in a week, Bitcoin dropped below $20,000 and is still struggling to pull itself back above that threshold. Back in January 2022, Soloway projected that the cryptocurrency sector might experience a dot-com moment soon, but also predicted that Bitcoin could trade at around $100,000 or $250,000 in the next 5 years. In a recent interview, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts, as well as his predictions and price targets for Bitcoin and gold. In his opinion, he still believes that Bitcoin might drop further to a low of $12,000. He is also a proponent of crypto regulation, believing that it would be a positive thing for Bitcoin and cryptocurrencies in general, as institutions would feel more confident investing their clients' money in them. Before listening to him, please ensure to smash the like button and subscribe to the channel. Let's dive into his last interview now.
Why does Bitcoin keep heading lower here?
Yeah, so a lot of this has to do with the dollar, right? So when you see the dollar continuing to stay at 20+ year highs and it continues to grind up, it just kills all risk assets. And you can actually watch on an intraday basis how every uptick in the dollar, you'll see the opposite occurring in the Bitcoin chart or in the stock charts of the S&P as well. So a lot has to do with the dollar. We have to keep an eye on rates. Remember, as interest rates rise, there are going to be a certain amount of investors that say, hey, listen, I could get kind of a risk-free return of 5% or 4%. Why am I risking my money in Bitcoin or in the stock market when I could lose 20 or 30%? So there's this give and take going on in the market as the market tries to gauge what the heck the Federal Reserve is going to do in this coming meeting. Are they going to raise 75? Is it going to be 50? Is it going to be 100? And again, the market is just trying to figure out the levels. We have Bitcoin that flushed early today with the stock market. The stock market was down sharply this morning. It reversed because the dollar began to pull back. And amazingly, I mean, gold was down this morning and then gold reversed basically flat on the day as the dollar came in. And you can see Bitcoin rallying up as well. So the key for me is continuing to watch this 19,500 level on a daily closing basis. The reason why that's such an important level to me is if you go all the way back to the 2017 high, that is the high pivot. And that's kind of the level we've been dancing around for a long, long time. So as long as we kind of hover around that level, there's a small chance that Bitcoin can get some sort of bid if the dollar comes in, if the Fed gives some sort of dovish speak on Wednesday that maybe shows a pivot coming for interest rates.
Now that you have the Bitcoin chart up, could we overlay S&P and gold and just compare all three here?
All right, so here it is. And what you could see is basically they're following almost in tune with each other. And I think this is so remarkable because, gold, we've grown up, for the past 20, 40, 60 years that gold was a safety play when things got scary in risk assets. But we can clearly see that's not the case here with gold and the S&P both dipping as Bitcoin has also dipped. And again, the charts are very, very similar in terms of their price action. And again, the key here is understanding that it's the dollar that is causing the movement in both gold as well as risk assets like the stock market and cryptocurrency.
But gold's been getting so much hate, with everyone saying, oh, where's that inflation hedge? But on the flip side, would you not say, well, compared to other assets, it's still holding its own, it's still a good protector of wealth? I mean, some thoughts here on gold.
Yeah, so I think gold has been doing amazingly well. Number one, if any investor out there was fully in gold, they would be thrilled this year, right? I mean, they would be so happy to only be down 5% or so on the year. And the other thing to remember is the gold chart is only down 5, give or take a percent, but the dollar has gone up 15% on the year. So if someone told me that the dollar was going to rise 15%, I would say, oh, well, gold probably should be down 15% on the year at least. And the fact is, it's only down 5%, which shows to me it's relatively outperforming what it should be doing. And it tells me to also that you likely are having smart money accumulating, which is why it's not down as much. So I continue to be a huge bull on gold. I think, again, people love to hate on gold, but in reality, it's performed well. I mean, take a look at the euro chart, the gold euro chart, or the gold yen chart. It's an awesome. If you were in those assets via those currencies, you'd be loving gold even more this year. But I think, again, the fact that gold is holding up as well as it is with such a strong dollar is a testament that it's getting ready for a big bull run. So I think Bitcoin still has another leg lower to 12 to 13,000. I think the stock market likely by end of year or early 2023 will tag the March 2020, the highs just before the March 2020 COVID collapse. So you're talking about the S&P downside to like 3,400 or so. The key for gold's outperformance is going to be when you hear the Fed pivot. The Fed pivot is going to be key because inflation's not going to be down to 2% or under, and it's going to tell you that the Fed is now more worried about the economy than about inflation.
Right, but a pivot towards what? Not QE.
No, definitely not QE, right? But it's just that idea. So the market is trying to price in how much more hikes they're going to do in terms of interest rates, how much tighter the dollar is going to be, the supply of the dollar. And what the market wants to see is it start to curl down, where instead of a 75 basis point hike after this next meeting, maybe they do 50 or 25, or maybe they go on hold. And what that's going to assume, that the investing public is going to assume that means they're going to go to zero, and then eventually when the economy gets into a bad recession, they're going to start going back to quantitative easing again down the line. Now, it's not for a long time, but you absolutely will see that again when the economy starts to really tank.
You said the bond markets, though, are calling the Fed's bluff. What do you mean by that?
Yeah, so that's such a great one to look at. And again, we had this major, ridiculously hawkish comments from Jackson Hole, from Jerome Powell just a few weeks ago. And still we've seen these hawkish comments that were kind of, you could argue that they were more hawkish than any comments we had ever heard from the Federal Reserve. We know it spooked the stock market. The stock market declined dramatically. And when I say they're calling the bluff, is that the bond market is made up of the smartest money in the world, right? It's the biggest market. It's the smartest money. And what you can see on this chart of the 10-year yield is that the 10-year is just back to where it was in June. And so what that tells you is that the bond market says, hey, listen, we don't think the Fed is any more hawkish than they were in June at these levels, even in spite of Jerome Powell's ridiculously hawkish commentary just at the Jackson Hole meeting here. So again, for me, that's telling me something. The bond market doesn't believe the Federal Reserve is going to hike rates that much more. I think, again, 75 basis points is probably what you're going to get on Wednesday. And then I think the Fed very possibly could be on hold after that.
Now, let's talk a little bit about the US dollar. Curious to get your thoughts about where you think it is headed. Is it taking a pause? Will it continue to march higher? Where does it go from here?
Yeah, so according to my calculations and probabilities on the charts, the dollar's getting ready for a reversal. So again, that would coincide with the potential of a pivot coming up here. And again, I don't want anyone to misconstrue what I'm saying. They're still going to raise 75 basis points on Wednesday. It's about what the commentary is. That's what what's going to move the markets on Wednesday, is what Jerome Powell says in his press conference. So if he even opens the door to kind of a pivot, the market is going to rejoice, the dollar's going to fall. And I do think that you have the midterms coming up, and the Fed likely will sit on the sidelines through the midterms and then reevaluate. So for the last year plus, I've been really a proponent of regulation. And the reason I am is that as much as we like the deregulation and kind of this independent currency type thing, if you ever expect big money to come in, and I'm talking about pension funds with trillions of dollars, I mean, just them putting 1% of their assets in Bitcoin would be massively positive for the price of Bitcoin. So I'm coming from the investor standpoint, where I want to see the price go up. And the only way you're going to get that is if you get a framework of regulation and people actually know the rules, right? So one of the things in the stock market that I've learned over the years of trading is that the market doesn't necessarily care if it's a positive or a negative. They just don't like not knowing, right? They don't like that ability to not figure out what the rules are. So by getting regulation out there, you create a framework where these institutions can say, okay, now we can play in this field. We can play ball because we know the rules and we feel comfortable investing with our fiduciary responsibility other people's money. So I welcome regulation. I think it's needed. You saw over the last 6 months, bankruptcies and shady activities and all this. And investors honestly are scared of crypto in many situations. So I think you have to get this regulation.
I mean, we saw, the other headline that the White House Office of Science and Technology suggesting that Bitcoin could be banned. Is that not a concern for you then?
No, not a concern for me at all, and mainly because there's too many jobs that have been layered on the crypto side of things with the blockchain and everything else, and there's too many big investors even involved in Bitcoin already where I just do not see that happening. So I think, if anything, it's kind of a scare tactic. They're trying to push people to think, oh my goodness, this could happen, and then when they do introduce some stringent regulations, it won't seem so bad. So again, for me, it's a matter of, Biden realizes, and by the way, there's a lot of politicians out there that do invest in Bitcoin and they're big fans of it. These are the politicians that know that they're running up the debt. They know the future of the dollar, and they're big fans of Bitcoin and cryptocurrency. So they're not going to be looking to ban it. And I think you're going to see that the regulation, whether it's a positive or a neutral or a negative, it's still going to allow for the existence of crypto, just with some rules to follow.
Let me play devil's advocate here a second, because there's another school of thought that would say, well, by Biden's rhetoric, it definitely sounds like the U.S. is headed towards a digital dollar quicker than we think. If that's the case, they're going to do everything in their power not to have a competing currency to that digital dollar, which would mean bad news for Bitcoin and the other crypto.
Yeah, so I think the key is to understand that for me at least, I think that a digital dollar doesn't really solve the problem of what Bitcoin's solving, and that you have this stated 21 million run. That's the essence of it, so it can't be printed like the digital dollar. In fact, you could argue that the digital dollar can be printed even easier. And I understand what you're saying where, will the government say, oh, we don't want any competition? But I think you have to look at it and say, if I was a politician, I would be looking at Bitcoin and saying, you know what, it's more of a gold. Why? So they're not going to ban gold then, but they're going to ban Bitcoin. But to me, it's a digitalized gold, so I don't see that being a conflict. And I think the key is Ethereum and some of these other altcoins, you're going to start to see regulation that lays a firm framework where they're going to be classified as securities. We know Gary Gensler has said that. And therefore, they're going to have reporting rules. There's going to be strict rules to report. But I think they're going to be treated much more like equities than kind of currencies. And so I think you have Bitcoin as the digital gold, and then you have a lot of these other cryptocurrencies that will have to report and be treated much more like equities.
You've basically said, you tweeted, look, it was a classic sell the news event. Ether down as we're speaking, also down 5% on the day. Thoughts on Ether?
Yeah, so I think Ethereum, right? So you have to look at it as the rally from the lows in June. It was about 100+%, and a lot of that was expectation of this merge coming. And really what we see, and we see this with so many stocks as well, is that people buy into these stocks on anticipation of great earnings, and then they report great earnings, and then people are like, okay, well, what's my next reason to own this? I'm up X amount of dollars. Let's sell it. Let's take profits. We'll revisit this in the future. And I think that's what's going on with Ethereum. As much as I love the merge, and I think what it will end up doing will be a positive for Ethereum, it still doesn't solve the immediate issue of the risk and the fear of crypto right now with the Fed being so aggressive. So you're going to see it come down here. I have a major technical level on my chart around $1,250. You can see it just kissed that level right down here coming from this pivot. If it gets through there, you could retest sub 1,000. But ultimately, again, you get down sub 1,000, and I think you start accumulating this for the long term very slowly because it could go lower. But again, you have to think about the thesis with the merge in the long term, but then understand that fear rules the day in the near term, and that's what we're dealing with the Fed right now and the strong dollar.
Anything else that you think is an interesting buy right now that you're eyeing?
Yeah, so I do think there are some interesting, like one stock that I've been kind of perplexed that we haven't got a better bounce on is GSK, GlaxoSmithKline. Pays a beautiful dividend here. And again, you can see how oversold it is to the downside, coming right into support. But bottom line is, guys, beautiful sell-off to the downside. I think this one is, in this market environment, this is one of the safer plays. It pays an awesome dividend, and it's already discounted. Pharmaceuticals, even in a recession, people still need their life-saving drugs. I think this is a definite one to keep an eye on.